Mandy, volatility's back, and it's something we've got to get used to.
Oh, yes, for sure. I think what really stands out this time around, I mean, the VIX is obviously back to the October highs, but what stands out to me is if you look at the rest of the volatility surface, longer dated vols have also risen this time around, whereas in October, the curve was inverted, saying that, yes, volatility is going to be elevated now, but back then, people were expecting more of a normalization going forward. We're not seeing that right now.
Elisa?
Well, here's the thing. Volatility in itself is normal and people need to just deal with it. We're getting back to a real normal. But it does change the risk-reward equation for a lot of assets. And the risk-adjusted returns that people forecast come down for riskier assets or more speculative ones. So even if this is just a return to normal, get over it, guys, this is just the way it is, still that does shift investing theses materially.
Henry?
You know, I think that fits in with the theme that we've had very expansionary policy with asset prices perhaps outpacing the real economy. And to your point about volatility rising, leverage probably needs to come in, and we need to think about the performance of the asset markets relative to the real economy in a more volatile, more normalized environment. So this is all really thematically the similar idea. So
the question I'm trying to explore this morning is, if low vol and abundant liquidity lulled investors into what many people accuse them of being lulled into a false sense of security, does the opposite apply? Can you reverse engineer that? Does high vol and diminished liquidity mean most people get lulled into a false sense of insecurity? Are some of the fears overdone, Mandy, is essentially the shorter question.
So I'm going to disagree in that I don't think that the low vol environment of last year was driven by liquidity. I think it was very much driven by economic fundamentals. We had this global synchronized growth story that was very much the dominant theme of 2017. Move forward to this year, the theme is very much desynchronization of global growth, and as a result, we should be seeing higher levels of volatility. And what you're seeing right now is very much a fundamentally driven market where people are looking at things like economic growth, the yield curve, earnings, et cetera, et cetera. So I don't think it's liquidity driven. I do think it is still based on fundamentals.